Good afternoon, ladies and gentlemen. Welcome to another episode of Huttons Consumer Connect webinar series. And thank you very much once again for being on time with us. My name is Peirce from Huttons, and I'll be your host for today. Now, to make sure that we keep to our schedule, we'll open up for a few questions during the Q&A session towards the end. And in case we don't have the chance to answer some of the questions later on, please always feel free to approach a Huttons agent who has invited you today for this webinar. Well, as we all march on towards the phase one of the lifting of circuit breaker in June, many of us have started to feel a stream of positivity from various fronts compared to 2 months ago. Now, strangely to me personally, the flow of events is somewhat reminiscent of the turn of events when Lehman Brothers collapsed in September 2008. And then in February 2009, Caspian Condo surprisingly sold more than 300 units in just a couple of days. That event also marked the beginning of a surge in home prices in the outskirts of Singapore. Now, it's always easy to look back and say, I should have done this. But how can we overcome that innate fear in us at that very moment to venture into the unknown? So today we have invited Mr. Daniel Teoh, Senior District Director in Huttons, to share more insights with us. With a bachelor's degree in business, Daniel held positions in the RSAF as an officer and subsequently worked in the banking sector before joining the real estate industry. He's also an ACTA certified professional training consultant. Now, 11 years in the real estate industry, Daniel leads a team of 50 salespersons and has helmed both Huttons local and international projects as the project in charge. He has also been consistently featured in Huttons' top producer chart. So, ladies and gentlemen, let's sit back and enjoy as the charismatic Daniel Teoh offers us the winning 4-point strategy to overcome your fear in investment amid this crisis. So let's put our hands together and welcome Mr. Daniel Teoh. Over to you, Daniel.
Thank you, PK. Thank you so much for the very glorious entry and a wonderful introduction. I feel a bit flattered. Good afternoon to all, and welcome to the last of the series of our consumer seminar. And thank you for spending this afternoon with us. It will be a short 1 hour, and it entails quite a lot of statistics, because it will not be hearsay and my personal opinion from this sharing. Now, the topic that we are sharing today will be the winning 4-point strategy to overcome your investing amid this crisis. Now, before we continue, there's some qualification. Foremost, let me introduce myself. I'm Daniel Teoh from Huttons. I have to qualify this. I come before you as a fellow Singaporean. Yes, I am a salesperson, but the views that I'm providing are unbiased. And the information I've gotten from open sources, mainly and especially from the research houses and our in-house research. Now, today I'm not alone. I'm back up with quite a big panel of specialists among us. One of them will be our Director of Research, Mr. Lee Zitik. And of course, PK, who is the moderator today, is also one of the pioneers in this industry as well. So I'm not short of talent among us all. Now, foremost, I'm not going to peddle any product at all. And like I said, these are all unbiased notes. For 1 hour, we're going to cover three. My scope of cover will be as follows. Now, one thing, the first foremost that we want to address fears. Are these fears of ours justifiable? Second, the most important question I think on our mind today among all the buyers here who are actually tuning in, local and overseas, will be, is this the right time, or is this the time to enter the market at all? Now, this is a golden question that we've gotten from previous webinars as well. But here we are going to address this once and for all as well. Last but not least, as the saying goes, it always pays off to get the right investment gem in property. Now, in Singapore, property investment is perhaps one of the key platforms for Singaporeans and our foreigner friends to make wealth and to build wealth in Singapore. So the last of my scope will be to cover how do you pick the right investment gem, the investment property. Now, without further ado, now please give us all your questions. But we have to be mindful that this 1 hour is too short to cover all questions. As I can see, we have quite a big turnout today. So please forgive us if we can't answer your question online, but rest assured all your questions will be answered and will be referred to you through your salesperson. Now, without further ado, please let me continue with the sharing and keep your questions coming. Thank you. Disclaimer. Facing fear. Now, if I were to tell you that I'm not fearful when this pandemic strike, then I'll be lying to you. The first thing that came to my mind was what's going to happen to us, all of us. Now, that is the greatest fear. Now, this fear is real. But fearing is not wrong at all. Why so? Because you are not alone. Singapore is not alone. And the number of deaths, while very unfortunate, but we have kept the number to a very small number, right? We are all affected globally. Now, if you look at the figures, I mean, you have these figures on a daily basis. Now, the fear that came and really struck me most is when I woke up on the 24th of March, when I saw my stock holding plummet to a point that I've never seen before in a single day fall. So 23rd of March was an unforgettable day. But one thing in the back of my mind is, what about my property investment? What about my property value? Have they plummeted that much? Now we're going to address that also in the following sharing. Properties price index. Now the percentage, since the pandemic has broken out, if you take a closer look at the result, now the all residential property price index has only gone down by 1.2%. Now vis-a-vis the 23rd March, I will call it the stock crash. That was a nightmare. That was the greatest fear I have, because my saving, I have quite a substantial amount in the New York Stock Exchange, and that really blew my mind. But one thing in the back of my mind, at least I know that my roof is safe, and it has only gone down by 1.2% in terms of price index. Now that's very crucial. Then there will be more information from DBS, our national bank, the research shown that this pandemic will actually offer Singapore the worst recession in the modern history of Singapore. As you can see, I mean, you have seen this chart many a time, and this is for real. And this fear is very real. Now, this is going to strike all Singaporeans. Now, MTI, the Ministry of Trade and Industry, actually mentioned that they have actually under forecast the recession, the depth of the recession. And we are even looking at an L-shaped recovery, no longer a V nor a U. Now, a V is too optimistic. A U, possible, but the L is almost certain in recent days as we read the news and the statistic that's coming out from MTI. More bad news, retrenchment is going to rise, and we're not going to see that. Now, this is something really unprecedented in Singapore. It's going to grow, and in the United States, we're talking about millions of job loss every month. This is fearful. This adds on to my fear. But I hope you're not leaving this webinar because of all the fear I'm striking in, because these fears are real and we have to face them. It is inevitable. DBS research in recent days also highlighted this. These are the forecasts from National Bank. Now, the full day GDP growth is forecast to drop to a minus 2.8%, but that's not all. That's not all. If you read the news in previous previous days, just a few days back, MTI also forecasted it will be worse. It may be between minus 5 to 7% GDP year on year. So this recession may be very, very serious, right? So is it the right time? Let's look on. Technical recession is given. Now, the knock-on impact on employment is unprecedented, as we mentioned earlier. This is all bad news, right? But these are real, and we have to face it. But with a smart government, now, the key thing about us as Singaporeans, I'm not trying to be biased. I'm not against our foreign friends who are tuning in now. Let's look at the Singapore government. What have they done? Twofold, two-pronged approach. Now, they've mitigated the whole effect of this pandemic since March with two interventions. First will be the monetary policy intervention, whereby we eases the Sing dollar as we move on, as we face the reality of economic crisis, right? So what's going to happen here now? They have actually said, now MAS has set a zero appreciation for Sing dollar. Now what's the impact? Layman's term, threefold. It will encourage institutional holding of Sing dollars. It will calm the volatile financial market today, right? We have to do that because we are the open trade market. We are open trade market itself. So Singapore, this is crucial to keep this, to keep all the prices stable is very crucial. So it will slow the rate of inflation. It will maintain a price stability. As we all know, Singapore has no natural resources. If we allow the economy to go into free fall, we're going to be in deep trouble. Everything is going down, right? Last but not least, it will inject the much required liquidity into the market. So these are the layman's terms. Now, you may not want to understand the graph, but these are the three key things that's going to happen, right? This very wise monetary policy intervention is very crucial to keep the Sing dollar as flat as possible. Now, what about the next? Of course, this is the all-time favorite of all, but this is essential as well. The fiscal policy intervention to mitigate the whole pandemic by the government is very wise, swift, and decisive. Now, I'm not a pro any political party in Singapore. I'm just stating the fact. Now, with just a few days back, the Fortitude budget, we have actually, this supplementary budget has actually ballooned to almost $100 billion by the government. Now, that constitutes about 20% of our GDP. Can you imagine $100 billion in a swift and very decisive mode that the government is intervening in order to salvage the situation and to restore faith in Singapore's economy? Now, these are crucial mitigation and these are crucial interventions. We must understand that these are done in order to stabilize the whole economy, because we are fluctuating and we are very much influential because we are open trade, we are open market. So it's crucial. So I love to see his face in recent days. We have to see his face. If I see his face on TV, I'm so glad, I'm so happy, because why? It's got to be more goodies in order to restore us, to restore the whole economic status. So the latest Fortitude budget is good and it's important and it's aimed at improving the businesses, of course, improving our welfare, Singaporeans' welfare in general, the workers' job welfare as well, and household, like this solidarity utilities credit of $100. It may seem small, but it's crucial in order to keep us going as well. So we have to appreciate the swift decision by the government, because by all these swift decisions is giving foreign investors the higher magnitude of confidence in our economy. Singapore will pull through. We will pull through because of a smart and wise government and timely intervention as well. Like I stress again, it's not because of the election is coming soon. Anyway, I'm not standing in any of the election. So what I'm saying here is important, that we must understand why is Singapore still doing well. And we will continue to do well as well in the coming quarters, despite the fact that we are facing an inevitable recession. So what I've covered is, are we supposed to feel fearful? Yes, we are supposed to feel fearful. If I'm not fearful, I'll be lying to you. Let's face the fact. Everyone is fearful around the world, but we have to keep ourselves safe and move on. Now we have to do that, because if we don't do that, now everything is going to be quite chaotic. It's going to be very chaotic, right? So we have to address the point. I'm not a psychologist, but we've been through enough crises in the past. The most recent, I was hit big time in the global financial crisis. I was in the banking sector. Almost every firm I went bust. I went Lehman Brothers, they bust. I went ING, they bust. So I think I may be the one that actually caused all this problem with Lehman. Actually, I was there for the interview. I was at beautiful office itself. I didn't make it because the bank didn't actually make it in time to recruit me. I mean, that moment itself, right? So now let's move on to the next scope. Now the next sharing is this the right time to invest in property? Now this is a golden question. Everyone is asking this question. Should I go in now? No, should I invest in anything at all in Singapore or overseas? Now this is crucial. We must understand. The first thing that comes into my mind is, do we believe that this pandemic will go away? Or do we believe in a worst scenario that this pandemic will annihilate the entire human race? It will not. And why will it not do so? Let's take a look at the latest development in the entire pandemic breakout. Good news is, after today's webinar, 2 days down the road, we are going to have a rollback of our circuit breaker. So we are going into the phase 1 of the economic reopening. Now that is very important, and it's good news for all of us. It is only a short 2.5 months or 2 months of lockdown. I call it lockdown. It's not actually a circuit breaker to me. I think it's almost like a lockdown. So is it the right time? Let's take a look. Now the pace of the coronavirus outbreak is flattening. Now that is one thing to know. there are many countries that already reopened their economy. Vietnam is one of the most outstanding among all the ASEAN countries. Vietnam, yes, that's right, Vietnam, one of my favorite countries actually, Ho Chi Minh. So if you take a look at the graph, it's all flattening. Singapore is doing well. We are suppressing it. We only have 23 deaths, and we should be proud of that. Now, that's one thing. The entire landscape has changed and is improving. Now, we are also racing among the rest to find a vaccine for this pandemic. It will come. It will come. Yeah, they also heard about the hurdle, what do you call it? The hurdle? Yeah, I mean, there's something to do with the vaccine. So that's one thing that we are actually racing to find a vaccine around the world. So everyone is racing. Why? Because a lot is at stake. Reopening of economies. Countries are reopening. China is perhaps one of the first to discover the pandemic, also one of the first countries to reopen. And in April itself, property is booming. If you look at the statistic, if you do your own research, I can't cover all the research here. So if you read into the details, they are actually improving. And it's actually a boom, a mini boom that's going on in the China property market as we speak now, right? And the rest of the country, like I mentioned, Vietnam, Russia, Europe, and etc. Singapore is going to reopen in 2 days' time. Now, one other thing that will affect us for property investors will be the Fed rates. Now, the federal rates, the US has actually cut the interest rate to almost zero and launched a $700 billion stimulus program. What does the Fed rate actually do for us? So actually, it will actually bring down the rates for borrowing. And that's a good thing. And it's a boom for all investors around the world, right? Now, the one very interesting note about Singaporeans, Singapore is very much cash flush. What is cash flush? If you look at the M2 cash in Singapore, now this includes all the deposit in Singapore and those convertible to cash, hard cash. Singaporeans are holding $660 billion alone. 660 billion. So there's a high level of liquidity in Singapore. That means that there's a lot of hot cash within Singapore itself. This is excluding the foreign hot funds that are coming in as well. So this only in Singapore alone. We should be proud. Now here, I'm not doing a nationalist approach itself, but what I'm trying to say here is very much that our country is very cash rich and the Singaporeans are cash rich. And we are very, very saving savvy, if I can put it that way. Now let's take a look at closer to heart our CPF account. Now bear with me, these are all statistics, but we have to know. Now if you look at the account itself, it's always growing by the year. And today as we speak, as you look at it, we are actually holding quite a substantial amount of CPF as well. Now why are these two saving important? Because these are really tools to invest in property if need be. So there's a lot of hot cash in the market today. A lot of hot cash, a lot of liquidity that we are looking at as well. Not forgetting the $100 billion of the supplementary budget that the government has pumped in to stabilize the whole economy. Now, what's the impact of the global economic crisis? Now, in the past in Singapore, why are the fears not unfounded? The fears are real, but we always pull through, and we have to pull through. We always pull through, and we will pull through, right? Why? In the AFC, in the Asian financial crisis, now property actually rebounded and increased by 40% within 6 quarters. Now the Asian financial crisis starting in Thailand it actually rocked the entire Asian economies. It went to tatters, right, hurting mostly Asian economies. Now not forgetting 911. Right, but that period itself, we are only seeing a small fluctuation of property price index. Now, the GFC is perhaps one of the most painful one. That started in 2008 all the way up to 2010. Well, I personally suffered a lot during the GFC, global financial crisis. Now, there was a plunge, but it was a V-shaped recovery because it was non-pandemic related. And all in all, within 3 quarters, property price actually rose by 62%. That's quite hefty for a 3% recovery. Now that is a V-shaped recovery. Now today we are looking at the L-shaped recovery for this coronavirus. Now that's something we have to accept the fact, right? Now Brexit also another shakeup, but within 10 quarters, it's only a small correction. So we went up by 12% again. Now statistics will not lie, cycles do not lie. This gives us added confidence Now we are at the back of our mind. We are always stroking with this. We are always worried about fears. When you lose $1, you feel the pain. When you gain $10, it's never sufficed to fulfill or to smoothen the pain. It's always the pain that we remember. So we always remember the fear, but we must understand. Now, all these things, all the pointers that we just covered for the second part of the scope is telling us science, the development of this pandemic breakout since March, we are recovering. Slow, but we are steadily recovering globally and not just Singapore, right? So this is something that should be encouraging for all of us. But it doesn't mean that we can spend every cent we want. No, life will still go on. It will never be the same ever again. Starting by stepping out of your house with a mask on your face, right? No one's going to see your beautiful face, right? No one's going to see your handsome face. Life has to go on. Yes, it's an L-shaped recovery, but life has to go on. The clock still ticks, right? Now let's move on. Properties price index, right? During the SARS development, what happened? It only corrected by 2.3%. Yes, the magnitude of coronavirus vis-a-vis SARS may be very different, but then again, we must understand the cycle continues and it always recovers. But within 2 quarters, it only corrected a mere 2.3%. What does it tell us? But this time around with the global lockdown, of course, the impact is much far-reaching. Then again, all the governments, the major economic powers, China, US, Russia, India, Singapore, no, the European Union, they are all doing their very best with stimulus of their own in order to recover from this pandemic outbreak, which taken more life. And of course, we took a lot of economic hit as well. Now, every crisis, we see recovery. Now, this is a short reminder for all of us again. Now, we have seen this chart umpteen times. We always grow stronger after each crisis. And I'll be surprised that we see this again after this coronavirus. But we may lament the chances of not staying invested and not taking the bold move of moving on with our life as much as you should, right? Now, there's one thing that we must not forget. Why Singapore remains as a top investment nation globally. I'm talking about globally. Anyway, in recent months, there's a survey done in Asia Pacific country. Singapore actually topped the choice, the options, and the option of foreign investors as a top choice for property investment, be it commercial, be it industrial, or be it residential, right? Singapore's came on top, right, in the Asia Pacific region. Now, why so? We must understand the geographic limitation of Singapore. We are only 42 by 25. I'm not too sure have we actually reclaimed more land. But inherent, we have this land scarcity issue to face vis-a-vis our population white paper, that by 2030, we need to have a population of 6.9 million. We are far from it. We are 1/million from the target. Now, we have a much higher demand than the supply that we can meet, as the demand outstrips supply year after year and projected all the way to 2024. So the demand for the next 5 years will stay hovering about 14,000. But that's in excess of what we are having in the market today. And now with this pandemic delay, we're going to see a crunch in the supply as well. What does it entail? And not forgetting, if you know Singapore very well, not the entire country can be used for residential construction as well. Now, a big chunk of it, actually natural catchment area, and also a big part of it will be industrial and commercial usage, leaving a very small portion of it for residential projects. So what does it mean? We have a higher population that's coming in, ingrown, external talent, but we only have this big a country to run, 42 by 25 kilometers. Now, this land supply will never be sufficient unless we explore more, right? But then again, it has to tilt the balance between economy and residential need as well. So this is inherent. Now, we must not forget this. Even the foreign investor friends will understand that Singapore is an island. We are an island. We have limited land. Now, there's inherent land scarcity. Now, that is why the land bidding cost rises. The land bidding cost will escalate. Bidding after bidding, right? Off the cuff, executive condominium. My goodness, the land cost I would use the word catapulted. Now, the EC are almost priced like a private condo. Now, that underlines the scarcity of land in Singapore, in specific residential land. Now, these are the recent development. Now, property rebound since the market reopened. Singapore is not reopened, but Alibaba had bought a 50% stake in Singapore AXA Tower. Now, these are signs that we have continuous confidence in Singapore property market. Now, this is the latest article. Now, I'm going to go a bit faster because I have much to cover today, right? These are the 3 points from the whole article. Now, forget about the wealthy Singaporeans. Now, everyone else can invest in Singapore. It's not only limited to the wealthy Singaporean. Let's be fair. Now, everyone is investing. If I may share, my client, one of my clients stay in the public housing, perhaps one of the smallest model of all, but he has invested in a River Valley condominium, a 4-bedroom River Valley condominium. So it doesn't, this is not entitlement for the wealthy Singaporean or the foreigners. Now, all Singaporeans have every equal right to invest because in Singapore, property investment is perhaps one of the most dynamic and most exponential wealth multiplier in Singapore. So this title may be misleading, right? Now, take a look at the middle point. People turn to property during this time because their money will depreciate during a recession, just like my stock. My goodness, I lost double-figure percentage in a single day, 23rd of March. I woke up with nightmare, I slept with nightmare, and I woke up with more sweat breakout on 24th of March. I didn't have my breakfast for a long time in my life because I can't swallow anything at all. On the 24th of March 2020, I lost a big chunk of my shares value. And it has not recovered since then, right? So almost coming to the end of the second part of our sharing. Now, let's take a look at the WEC IMF forecast. Now, it will not, now, if I may put in my own words, if I may put, I'm not a politician, I'm not running the country at this moment. Now, let's take most of the government, when they come on a stimulus package, be it US, China, EU, I suspect and I believe they are looking at a horizon, a recovery horizon of no more than 2 quarters, maximum 3 quarters. We should be looking at full economy reopening, market opening by the first quarter of 2021. That is why the IMF has actually forecasted that Singapore in 2021, we should see a GDP growth of about 3%, right? And they're pretty close to the forecast for this year. There should be a drop of about minus 3.47. As MTI actually latest statistic forecasting between minus 5 to 7 for the worst case. Now we must understand how our government work. The forecast is normally for negative news, they are normally overrated, overstated, right? That's one key thing that we understand. But I'm not playing the part of our government now, but I'm just saying that that's part of our culture, perhaps an Asian culture to start with. So we must be optimistic. We have to be optimistic. This is Singapore. We have proven time and time again after independence, we are able to overcome all crises time after time. This is us. This is in us. All right. Now, the golden question. So when to enter the property market? This is a DBS forecast. Of course, it has been overtaken by the NTI forecast, right? Now, when is the best time to enter the market? Now, many buyers are telling us, telling our fellow, everyone, the salesperson in the industry today, no, this is not the right time to go in. I believe the developers will be dropping the price, this pandemic will get worse, it is the wrong time to get in. There's no right time to get in at all. Then when is the right time to get in then? Do we get in at the highest point after recovery? Next year, the last quarter? No, when do you buy? When do we invest in property? When you're at the lowest point or the highest point? Right? Is it a very difficult question to ask? Now, the key thing here is not about whether it's the right time. It's whether you're ready to enter the market now. Now, many a times we are stricken by this fear. The fear is the one that's playing on our mind. If you are ready, if you have the saving, if you have the desire, and you know that our property market will recover. When is the right time? I may not have the best answer for you, but let's take a look. This is perhaps the best entry period. Rest assured, right at the end of my sharing today, I will tell you why I will testify to this best entry period. Now, so you stay put. I'm going to force you to stay with me for the next half an hour. You are not supposed to leave this webinar until it's over. I promise you, I'm going to share with you why this is the best entry period. Now, I stress again, the underlying factors will be, you must be ready. You are economically ready, right? Why so? Let's go through the points. First, age factor. Time and tide wait for no man. If you decide to wait out this market, it may mean another 2 years of waiting. Now, how old would it be? Now, in Singapore, if you were to invest in a property, the age play a very significant part of your loan tenure and the amount of loan that you can take up, right? So opportunistic investment is very crucial, like the articles that I just shown you earlier. So you have to go in when the time is right. It is not when the time is bad, but you have to know when is the right time to get in, right? So low interest rate will not stay put forever, like the federal rates I also shared earlier. Now, all this development since the pandemic in late March till now, we have seen. Now, these are all very pro-investors measures. Now, this low interest rate today, as I speak, correct me if I'm wrong, for those banking specialists out there, especially the mortgage specialists, we are hovering about 1.2 to 1.3% now. That's extremely low. And this is going to be low for the next few quarters. So translated will be a few years. So why not take full use of this opportunity to get in? Now, remember, Singapore is 42 by 25. How big can we get? How much land can we reclaim without encroaching in our neighbor's shore, right? We can't do that. There's only that much land we can run. But the most important thing of all, when is the right time to enter now? 2 points. When your job is secured, if you're employed, if you are a business owner, if your business is still thriving and running now, and you have prepared yourself adequately for this pandemic. Every time is the right time, but this is perhaps your best time before the recovery takes place. Now, I hope this will answer your question, or at least answer part of your question and relieve some of your fear. Now, what have we covered thus far? We have covered the fear is real, and it is right to feel fearful. And I'm fearful. I felt hurt as well. But look at the development since end of March till now. A short 2 months, $100 billion pump in through the supplementary budgetary by Singapore government. And all the economy reopening, the run for vaccine, right? Low interest rate environment, cash saving is overwhelming. Singapore only have that much of land to build anything else on it for the next 50 years. So what is the right time? Do you wait? Can you wait? Will the clock stop for us? I doubt so. I seriously doubt so, right? So now I want to use a local analogy. I was told by my company not to use dialects. I have to do this. Now, the last part of my sharing, I hope I'm on time. Let me just run a quick check of my time. I should be on time. Now, the key thing now, the last part of my sharing is very much a borrowed wisdom by all the investors that we have served in Huttons. Now, I cannot cover all the factors. How do you pick the right investment property? Now, in specific will be the new homes, right? Why? And how do you pick them? Now, the analogy goes like this. If you know this king of fruits called durian. Now, durians have many grades, right? We have D13. If you're not familiar for our foreign investor friends, we have D13. These are the names that we give to the different breeds and different grades of durian. We have D13, we have the golden phoenix, we have the red prawn. But the epitome of all will be the Musang Wang, the king of Musang, right? Now, learning to pick the right property, learning to pick the right investment property is like picking a durian. Now, if you don't pick the right durian, the right grade, then you end up with the subcaliber. But the worst thing of all, if you're Singaporean, if you understand Hokkien, if instead of getting durian, and in the end you get amor durian, which is the sour salt, you are in deep trouble, right? You're in deep trouble because of all the taxation system in Singapore. If you pick the wrong durian, you'll be in trouble. Now let's move on, right? So why invest in new home? Now, let's ask ourselves, why do we buy resale home? Why do we buy old homes? Now, many a times we buy old home, if we do interview most of our clients, now the reason is very simple. They have attachment to the cluster, to the district itself. They grew up there. The kids grew up there. They met the wife there. They met the girlfriend there, right? Or they need a home that's specific, of a specific location, and they want certain attributes that can only be found in the older homes. But are these homes actually investment grade? There's one sure investment grade property type that I can tell you the right product. It's called a good class bungalow. But then again, how many of us can actually purchase a good class bungalow, right? If you ask me, Daniel, what is the best investment in Singapore? Let me tell you, it's called GCB, called good class bungalow. But unfortunately, it is not easily available for all of us, right? So I got to work very hard in order to do that. So that leaves us with the next best choice, new homes. Now, why new homes? I'm going to share with you some of the details, but you got to stay with me, and I'm going to run very fast. Because why invest in new home? Now, there are three key points. The progressive payment will allow us to save on the interest. With the bare minimum sum of the down payment, you will actually magnify and maximum your return, your ROI. The second point, straightforward. If you're Singaporeans, you get to build up and earn your interest using your CPF monies. Now, instead of putting all your monies in the CPF box, which is not wrong, but earning the interest vis-a-vis the ROI that you have if you invest in a property in Singapore. Of course, it can be several times or many 100% more, right? Of course, if the development sell well, chances are the developer will start to increase price. Now, some of you will be dying to ask me, you may be asking me, Daniel, are the price going to drop? Now, in recent articles, developers have really shouted out in the papers, they say they are already absorbing 7 to 10% of the increase in construction costs because of the pandemic. What makes us think that they are going to drop the price further? They're going to lose big time money if they start doing that, right? Now, if you're a developer, would you do that? Would you go into the price war with everyone else and start slashing each other's throats? I don't think it's healthy for us at all. If they start slashing prices, for those who have invested in new homes just a few quarters before the pandemic, what will happen to them? What will happen to Singapore? Now let's take a look why new homes. I pick up a few districts. Now you take a look. Now this is the sale at Marina Bay, TOP in 208. Do you see the window there? The green? Now do you see the certain pattern that you see? Now let's move on to the next one, Metropolitan. Do you see the window of opportunity to exit with profit? These are all, currently we are known them as in the resale market, right? Secondary market. But if you have entered during the preview, during the launch, you're sitting on a very handsome profit. Next, City Square Residence is one of my favorite actually. Now you take a look. Look at that. Look at the pattern. Now, right after this peak, what do you see? It's very similar for the rest. Livia, another different district. This is more on the eastern coast of Singapore, right? This is in Peirce. Now look at that. It's a handsome profit, a very handsome profit. Not decent, but handsome, if you ask me. Vis-a-vis my stock holding. Coven Melody, another favorite district. Look at that. Look at that. Now, if you're an investor, what is your time horizon? Now, we must understand this, right? Look at the pattern. Lakeholmz in the western part of Singapore. Can you take a look at that? That is a short 7 years. What is the price increment? Almost 123%. But you look at the trend. Now, let's say if you decided to invest in the resale property, what will happen? You are going to buy along this line. Most of it, right? If you take a look, right? Now, that is the key thing, why we are recommending new homes. I'm not saying that resale homes are no good. I'm not saying that the secondary market is no good, but I'm saying here, if you're investors, what are you looking at? You're looking at the window of opportunity to exit the market rather than buying into the stagnant or the plateau pattern. That would be quite challenging, right? Now, normally what is the investor's time horizon? What's your time horizon? Many a time we hear from the investors, no more than 10 years. Normally they're in the short to medium term, 5 to 10 years. But that is right. That is the right window of opportunity. Now, I'm going to go into the last part because I'm only given 1 hour to share with you, and we have to take in the Q&As as well. So I'm going to share the 4-point strategy. Now, it may sound very simple to you. You have heard it many times, but rest assured, trust me, trust us, right? All these are crucial because these are shared by the investors themselves. But I can't cover all the points, all the strategy, but I pick up 4 main strategies that is most applicable to all of us. And I'll run through them. Please post all the questions you have and we will try to answer them. Now, first, you have to plan your exit strategy. You must have the right mindset. Many a times I have this problem that I face on the ground, right? When we are serving a client. Daniel, I'm an investor. Wow, wonderful, Mr. Investor. So what would you like? Oh, I would like to have a 2-bedroom, with certain ROI in mind. Wonderful. So we went to the new home, to the project, and the first thing that shocked me, oh, I hate the looks. I think this is not going to offer me a very beautiful view of the bay, of the pool view, etc., etc. No, I don't think it's comfortable. Now, is that the right mindset? Am I going to stay there? Is the investors going to stay there? So that's something that it always puzzled me. We cannot be so emotionally entangled as an investor. Next, you need to have a plan. You need to have a plan. You need to have a plan to understand what is the budgetary assessment, what is your time horizon. You need to invest with the end in mind. What is your absolute ROI you're looking at? And what are your exit strategies? So the foremost, most important to sit down, to understand the mindset. What is the mindset? A home buyer or an investor? Sometimes it's a hybrid of both. Now, when it's a hybrid of both, then it will be challenging. Now, all the more, it makes it more important for you to discuss with your banker and your most intimate salesperson, because only then they will be able to assist you and facilitate your planning. Now, key thing, let's stay on this line, your exit strategy. Now, exit strategy, many a times we only have a vague number in mind. I want to make about 5% over 2 years, 3 years. I just want to make $100,000 in the next 5 years. Now, these are very ballpark figures, which is not very accurate and is very, very unprofessional. If any of the salesperson should go along with you, perhaps it's high time that you find a new one. I have to say that. Because exit strategy will entails a lot of financial calculation. Now, let's take a look at this case study here. Now, I have an investor who have identified Trevor, which is a project by UOL. No, one thing is I'm not trying to endorse any product. I just chose Trevor because it was one of my most recent clients. He has a sum of 1.2 to invest. So we actually identified Trevor as one of the project to invest. But first thing that we do is not about bringing him to the show suite to show him the place. The first thing that we are going to do is to predetermine the financial objective of my client, right? Based on the compound annual growth rate. The CAGR is the one of the most accurate formula to be used for a single investment, whereby the interest earned along the way through a period of time will be reinvested, right? As you can see, this graph, don't be confused. Don't worry about this graph itself. This is not what I'm trying to use to confuse or to convince you. But I'm merely trying to tell you that there's a time horizon between 5 to 10 years for most of the investors. And based on the CAGR formula, we'll calculate based on the rental collected. Now, there are 2 folds of return for all investment, right? ROI based on rental and also capital appreciation. Now, the right side with the bank interest, these are the costs. The red boxes are your costs. So I did a very quick one. Foremost, there are 2 things that I did. One without ABSD, additional buyer stamp duty, and the other one with the buyer stamp duty. Now, take a look. Without the ABSD, if you take a look at the profit, what do you see? Do you see the profit? Now, what is the CAGR that I use? It's only merely 2.3%. It's hovering almost like the inflation rate. Now, I'm not ballooning the profit margin, the profit figure by per annum. I'm just using the CAGR, the rate that we use for this simple calculation. Of course, there are many factors and entails, which I'm going to touch on later. Now, this is without ABSD. Now, then you'll challenge me, Daniel, come on, give me a break. This is the ideal case. Now, let's move on. Now, this is the graphic to show you the profit without ABSD. Can you see that? Almost $500,000, 10 years. Why is it negative in the first 3 years? Seller stamp duty. Now, let's move on to the next one because I have about another 10 more minutes to cover the entire scope with you. Now, this comes with ABSD. Now, this is interesting. This is what my buyer went through. Now, my buyer is a Singaporean, right? Young chap, very young chap, work at Amazon, right? So he's looking at this, and we did an exit strategy or financial calculation for him, or financial planning, or we call it wealth planning for him for the next 10 years horizon. Now follow me, if 1.15 mil, no, interest rate is hovering about 1.5 now, young chap, 30 years, so maximum LTV, right? Because fully paid the first house, went for 1.15 house. We have actually put in all the calculation. Now this tool is very essential. Now I'm not going to pass it to you guys, sorry, because this is proprietary system. So, but this system now lies in the hands of your salesperson. So I urge all of us to sit down with our salesperson to take a closer look at this before you even start hunting. Now this comes with an ABSD of 12%, right? Now let's move on. Now what do you see? With an ABSD, now what do you see on a 10-year mark? What is the profit are you sitting on? This is the profit you're looking at, almost 3 million, 10 year. Now let's not talk about 10 year, let's talk about 6 year. 2 years into holding the property. You're looking at a very handsome profit of almost 170 grand into the 6 year of your investment. Now, how many of us here can say that you can speculate stocks and commodities so well that you can make this amount based on the initial investment? How much in the investment? $110,000. It's almost 1/4 of your initial investment, right? How many of us can say that the fund managers can do this? Now, I'm not challenging the fund managers among us here. There are some very brilliant ones. But I'm saying, don't you think that I didn't really lose too much of my sleep after the second night, after 23rd March? You know why? Because I know that my property is still doing well. My property value is still there. You know, it can't collapse overnight, and the volatility is not there. The fluctuation is not that great. So this is one of the key things. We must understand that knowing the financial, your market progression forecast, your financial objective is very crucial. Now that's the first strategy we are looking at, the first point. Now let's go to the second one, right? So in an investment grade property, what do you need? You need to unlock wealth of your property. So you need to exit the market. I like this Greater Southern Waterfront, the transformation plan of Singapore, because if you take a look, follow me with my every click, can you see? Now every phase of development within this Greater Southern Waterfront will give you a chance to exit the market. Can you see that? So every time when there's a new development, there will be a new land bidding cost. There will be an escalation in land cost, making your new launch, your new property more attractive. And again, more attractiveness as we go along. Now, this is one of the most classic case of understanding the transformation plan by the URA. So this entails giving you no less than 9 exits points when you invest in any property that realize and is dependent on this Greater Southern Waterfront transformation. Now, for those friends, foreign investors friends who are not familiar with this, you can always check with our friendly and professional Huttons salesperson with ample information to drown you and to share with you on this point. See, I am not done yet. As you can see, there are many exit points. Meaning to say, now the better illustration. Now, if you were to purchase this new home at this point, can you see the number of opportunities that you have to exit the market? Whenever there's a completion, can you see that all the way up to 2040? My goodness, right? This is exciting. So this is the point of finding, this is one of the key factors. How do you identify an investment grade property? Now rest assured, our agents will know where to point you to. Now, second point, selecting the right cluster. Now take a look, 8 River Street, both of them different projects. Now 8 River Street. Now, we must understand when you choose a cluster, is the new home expected to be investor dominant or own state dominant? Home hunters will be buying this project or be investor. Now, if you take a look at 8 River Street, can you see the fluctuation in the price? Now take a closer look at Principal Garden, which is the lower chart. Can you see that? Can you see that? So if you're investors, which one would you be going for? Plateau or this? It is your call, but it's important to understand what will be the main domain of this cluster. It is important to deep dive and understand the possible purchaser of a particular project and a cluster. Now, the next thing that you have to look at, now this is another classic case. Now this is in District 7, right? If you're familiar with Singapore, this is District 7. If this is Marina Square. right? Will there be an oversupply or under demand after the new launch? Obtain the TOP. Now, this is crucial. Why is it crucial? Now, if you invest in a particular new home that is surrounded or intended, there will be many simultaneous new launches coming on. Would it be good for you? Because you're investors, so there are 2 points of investment, 2 factors: ROI on leasing and ROI on your capital appreciation. Now, for this particular District 7 that we are looking at here, there are merely 5 main residential projects you are looking at with merely slightly over 2,000 units. So is this a good cluster? It is your call, right? So you have to think through, you have to consider this. There's no right or wrong answer, but there's a better answer to this. Selecting the right criteria, the right cluster. Is there a positive uptrend in the pricing? In general, in the secondary market. Now we are talking about secondary market here. We're not talking the new launch. The new launch market window is for the initial investment window when you unlock the wealth. Now this subsequently in the years to come, when you realize what is the secondary market dynamism in that particular district itself. So if it's a positive uptrend, it is good. This added confidence in this particular district. Now the third stroke of strategy will be the URA future transformation. Now many a times it is not merely going into the URA, taking a look, what the new things be overall, and standing in awe of the features and the graphics that you've seen there. It's not about that. It's about understanding how would it actually affect the property that you're investing in. Would it be a shift or decentralization plan? Would it be a shifting of the population to the particular spot that you're investing in? Would it be a high growth industry going on? Would it be a future growth, economically, infrastructure growth in the particular place? Now, I'll only pick out a few points. I'll pick out a few transformation plans. One of my favorite is Jurong Lake District, right? Which was unveiled in 2008. When it was unveiled, it's quite a laid back estate. I used to grow up in the West. So when I heard about this JLD transformation, it was very exciting. But then again, people normally don't look at the West. Then they say, wow, how much can they do the wonders to the property price there? Now let's take a look. After it was announced, take a look. In a mere 5 years, the price went up by almost 100%. Now these are existing property next within a cluster. Now take a look at Chinese Garden MRT. Can you see that? Can you see the effect of a future transformation study? It is crucial to understand. Now there are a few transformation plans that's coming up. I can't pick everything to discuss with you, but I'm just picking a few selectively with you. They might excite you. So if you're looking at an investment grade property, you may want to center on this few, but of course there are many other transformation plans as well, right? Like I mentioned, the Greater Southern Waterfront was one of my favorite because they have multiple exit points. Bukit Timah Beauty World is one beautiful cluster, District 21, where it's quite an affluent residential area. Paya Lebar Airbase is interesting and very exciting. That's coming up as well, right? For more information about the impact of all these transformation plans, you can discuss with a salesperson from Huttons. They are equipped with one of the best knowledge because we are almost like an architect of URA. We have been studying the URA transformation plan day in, day out, feeding on it, right? So that we can feed our clients, right? More information about the airbase transformation, which is coming up. Beauty World. Downtown as well. Now this will affect this area, not affect. This will enhance. It will actually enhance the value of these specific districts. As you can see, quite substantial number of districts that we're looking at. Right? From River Valley all the way down to Bugis. So District 7, 1, 2, 5. These are very interesting areas to look at as well. Last but not least, I'm coming. Now you may be asking me, Daniel, why MRT again? Come on, we all know, or some of them were saying, no, the government has planned the extensiveness of the MRT network. Now, come on, this old story. Now, it doesn't work that way. As an investor, let me ask you, if you're leasing, do most of our tenants drive? They don't. What do? They need a train. They love the train. Would they take the LRTs? No, they won't. Would they take the bus? They may. They may, if they're stingy like me. But chances are they won't. They want the MRT. I just want to share a story. I once served a client. So I was showing him and tell me, oh, Daniel, come on, man. This place is nowhere. I told him, sir, this project is wonderful. It's right next to the MRT. Why do I need an MRT? I have 4 cars. But I asked him, sir, are you going to stay here? Or is it your tenants going to stay here? So I'm dumbfounded, actually. So that's why I say the MRT effect is very crucial. It is not for you who is the investor. It is for the tenants. So it's important, right? I'm going to show you some statistic. Now, downtown line, why is it important? Now, you look at the property price, the effect on the property price within 500 meters of selected downtown line, Beauty World, Stevens, and Meadows Reservoir. You can see, can you see the appreciation in the price itself? In a mere 1 year, within a 1 year period after it was announced. Meadows Reservoir, this is where I jump. Can you see that? Now the challenge comes this way. Right after this webinar, I guess many of us will have a lot of things on our mind. Daniel has shared the 4 points, right? First, you have to have the right mindset and the right planning. You have to understand your exit strategies, right? You have to understand the transformation plan, right? Then the right cluster, and of course, the challenge of finding hotspots that's along the future MRT lines. Existing line as well, but best will be the future line, and it coincide with the TOP date of your choice investment property, right? Now, without further ado, because I'm almost time's up, so I know that someone's going to remind me, to watch my timing. I hope I'm not too fast with my sharing. I'm coming to my personal sharing very soon. Now, this is my sharing with you. Now, I promise you, right, I'll share my personal story with you. Now, this some time back when I was still very young. I was young then, perhaps, yeah, I was young. Now, I came along, I was with my wife then, young man, newly married, right? So I chanced upon this project called Platinum Age, which is along Potong Pasir, freehold. So it came into the market in 2005. So we popped in. I was trying to impress my wife then to show her that, no, I'm a smart guy, I want to invest in this property and I'm going to make a lot of money out of it. So we went to the show flat. We identified this particularly. I always remember this unit, 0701. So they were asking at 660 grand. I did some max. I said, wow, not too bad. Actually, it's quite a good price. I can afford it. Why? And we think that, oh, maybe it's a good chance to get in, And you know what? The entry point would be at one of the worst point, if you can see, it's during the SARS period. So you ask me, when is the right time to buy? I'm telling you, this is a real life story I'm sharing with you. If I may, I will get my wife to share with you her side of the story. She's still cursing and swearing me at this moment after so many years. What's my potential ROI? If I have bought the property, I say again, I bought the property at 660 grand. Within 4 years, 10 months, including construction of about 3 years plus. Within 4 years and 10 months, I would have a gross profit of 320 grand. 320 grand at that time, at my tender age, I'll feel like a millionaire. But you know what happened to me? I didn't take action. You know what I bought? I bought a resale flat. You know why? Because I hesitated. I'm worried. I'm worried that I'm overcommitted. And SARS is still raging on. I'm buying at the wrong time. I swear, this is my life story. Do you want to go through what I just went through? This is what I promise you. Until today, when I drove along PIE, when I take a look at Platinum Age, my heart still aches. Because I could have been quite a rich young man then. Now, this is a real life story. Yeah? I'm going to put it. So, let us not repeat the same mistake year after year. I always hear my clients saying this to me. Daniel, I wish I listened to my agent and bought the property last year. Come on, last year never come. Last year is lost, it's gone. So when is the right time to buy? Do you know what to get now? Do you know what the things we need to do now? Now this pandemic will go away. It will not last forever. But time and tide wait for no man. If we don't take the action now, we will live to regret. We may live to regret. I'm not saying that we will live to regret. We may live to regret. So what should we do? Stay on course during this volatility. Show your grits. Not greed, but your grits. Grits. Make a wise decision. If, I say again, if you still have a great job, if your business is still thriving, and you know you'll make it, don't wait. Just do it, right? And that's the end of my sharing. Over to you, PK. Thanks.
Thank you. Thank you, Daniel, for your insightful presentation. I hope your heartache heals very soon. All right, I'm sure many of us are starting to see the power in us to navigate the sea of opportunities amid the choppy waters.